Welcome back, you beautiful people, to the Real Collective Podcast. I am Sean Tasse, your host, joined by my illustrious co-host and throat clearer, Kyle Miller.
Sorry.
Kyle, welcome to this snowy day. We are recording. I think we're like a week ahead when we're recording. I don't know if this is going to launch until mid-April, but if you remember back when you're watching this to that April Snowmageddon on April 4th, this is what we're dealing with today. Hit that like button, subscribe to the channel, share this with someone who you think might like this type of information. If you're watching on Apple, YouTube, or listening on Apple Podcasts or Spotify, thank you. Book an appointment down below with Kyle or I in the calendar links, and download the buyer or seller guide below. Kyle, how you doing, man?
Living the dream, buddy. Living the dream as usual.
Yeah.
Got here in one piece today. That's good.
You're the second person today who tells me that you're living the dream. My question always is, whose dream?
Well, you know what? Who was it? It was a guy named Les Brown. He's a motivational speaker. He said, if you get up and there's not a chalk outline around your body, get up. It's going to be a good day. So there, I guess that's my dream. I got up today.
Yeah, if you're not dead, you're living. So live.
Exactly.
That's it. Smile. Put a smile on your face. Make the world a better place. All right. We wanted to get into talk about a few things today. There's some interesting stories I think that we'll get into in the second half. But before we do, we want to talk a little bit about closing dates, the importance of closing dates, when to close, getting back to basics, when to close, what to do. If you're buying and selling a house, how do you close on both of them? How do you line those up? What do you need to avoid, et cetera, et cetera.
What not to do.
Yeah, exactly. Don't close. Don't not close. How's that?
Yeah, always a good deal. Don't not close.
Always be closing. ABC of real estate and sales. So closing, of course, means when you take possession of your house, you'll meet with the lawyer, you'll sign your documents, and you will get your keys at closing day. Now, a few things about closing day. The home needs to close before 6 p.m. It can close before, but on closing day, it needs to close. And that means that the lawyers need to sign off on everything, and the banks need to have agreed to transfer the money before 6 p.m. on the closing day. Until you actually have it closed, officially closed, you can't, as the buyer, go into the home. After it has been officially closed, the seller can't be in the house anymore. We've had people with issues on closing day still moving after it's closed. Sellers still moving out in the morning, trying to move into the next house in the afternoon. It's not like a rental, right? You have an entire house full of stuff. Moving companies can't move you out of one place in the morning and into another place in the evening. You need time between the two. So the closing date is not the moving date. Okay, the closing date is when you take possession of the home, you get the keys. The moving date can be a day after, a week after, a month after, as long as you're lined up, depending on if you're going from a rental or if you're going from a home that you own. If you're going from a home that you own and you need to own both houses at the same time, you need Kyle to set you up with the Red Hot Chili Peppers under the
bridge, baby. Bridge. Yeah.
What's that about?
Yeah, the big misunderstanding or misconception. So bridge financing, basically, if you make it simple, you closed your house you closed the house you were buying on a Monday, and your house that you're selling doesn't close till Wednesday. So there's a 2-day gap where you technically own two homes. And what the bank but let's pretend you need all the money from the sale of your house on Wednesday to buy your home on Monday. So what happens there is the bank will offer you what's called a bridge loan, right? So they're at that point, they're 99.5% sure this Wednesday deal is going to close. So they will take the risk and they will lend you the money to close on your house on Monday and then allow you to skate till Wednesday and close that. That doesn't have to just be 2 days. 30, 60, 90 days is also fine. Just costs more money.
90-day bridge?
Oh, yeah.
Ow.
Some people will. Yeah. Some people will. Yeah. It's not perfect, but it can't happen. The key, though, is that a lot of people roll into this and they're like, hey, Kyle, like, I'm selling. I've already purchased a new house. I just need you to get me a bridge. I'm like, well, when's your house sold. What's the closing date? Oh no, I haven't even listed it yet. Okay, well that doesn't work. You have to have a firm sale on your house.
Yes.
Otherwise, we are going into a different territory, which is fine, but it's way more expensive. That's when, so if you don't have a firm sale, you cannot get a bridge. Just to be very, very clear, you have to have the paper that says, we waived our financing. We're buying your house on such and such a date. Let's go.
Listen,
right? Without that, you get nothing.
If you don't have a firm sale, call me. I'll get you a firm sale. Well, we also have, this is sort of a backup plan. We also have people who will just buy your house for cash. So hey, you need a closing in X number of days. You need a firm agreement of purchase and sale, and you need a closing in 2 weeks. Got you covered. We got, those signs that you see around the city. We'll buy your house for cash. We work with some of those people, and so if you need your house bought for cash and a firm agreement of purchase and sale done, we can do that. It's possible. So.
So those are just investors that you guys have on the back burner.
Yeah.
And they just charge a fee to get out of it. I'm assuming.
What do you mean a fee to get out of it?
Well, they just bought your house, and then I guess it's just not your problem.
That's right.
Anymore.
Yeah. They bought your house
right.
At the end. Now, the price they're going to give you is not what you're going to like, but it's there. So, it exists as that backup, as that basket backup.
That's an interesting thing too, because typically my alternative plan always, once I've seen the numbers, is with a private lender. So here's a couple of things that come up when you're talking about bridge financing and just buy before selling. Maybe this went way off closing dates, but the fact that we started here, but look where we are. But is the fact that where was I going with this? We have lenders who will do people will ask and say, hey, get a bank to just give you a loan on the house that's for sale, right? Like a line of credit or a second mortgage. Yeah. No bank will do that. No bank will lend you money while your house is listed for sale, right? If you want to get into some very gray and gnarly area, right? Take it off the market, get a mortgage, put it back on the market, but that becomes very dangerous, right? Because the bank can be like, no, right? So what they will do is we can get a private lender, a MIC lender, something like that. They will do a blanket mortgage in a lot of cases over both properties. Yeah. So they're essentially doing the same thing as a bridge, but it's you don't have to do anything with you. Your house doesn't have to be sold yet.
Yeah.
Right? Yeah. They know they're getting paid back when it does eventually sell. Now, don't get me wrong, that's more expensive, significantly more expensive. But you start weighing those pros and cons. What are you leaving on the table by having someone, buy it at a fire sale price versus the fees that are incurred in this? And you want to look at all those numbers. Don't make that decision on emotion. Make that on fact. So look at the numbers. But there's other solutions out there too. So it'd be good to compare those two.
Yeah, it's neat that you and I both are solution oriented, and our solutions are both like, hey, here's the playground that I'm in. Here's the solution that I have for you, right? And so it's nice. It's cool to see like, oh, okay, well, there's a money solution and there's a selling your house solution, right? And so each of us like gravitate towards a different one. It's neat. So circling back to talking about closing dates, other things to avoid when you're scheduling a closing date. Never want to close on a Friday, because if there's one piece of paperwork that doesn't happen, and 6 o'clock rolls around and it's not there and you don't close, you burn the whole weekend. And chances are you've scheduled your movers to come and move you on that weekend. So if you're thinking, hey, I want to close Friday, really take the Friday off, take the Thursday off, close the Thursday. Sometimes you can sign the paperwork with your lawyer 2-3 days in advance of closing. So maybe you're taking the Friday off, you're signing your closing paperwork on Monday, Tuesday, and maybe that's just a quick appointment after work or online. A lot of lawyers are doing remote closings now, so potential there. You also, the worst closing date ever, I don't know if it's June 30th or July 31st.
June 30th.
Oh, that's right. June 30th.
Busiest real estate day of the year.
Yeah. So don't close June 30th, right? Yeah, because July 1st is a holiday, right? So like the day after is a holiday, and then it's normally like right around a weekend typically, or there's extra days off. So yeah, don't close June 30th. Never close at the 30th or the 1st or the 15th. Those are terrible closing days. So, if you can close anywhere else in there, you're nice.
And you know what else? Be present for your closing. Like literally be present. Be there, be available. I don't know what it is with us. Maybe it's HGTV because I hate them, but it's the fact that we, as a like, especially as a society, we love real estate. It's like a balling thing to play in and out of real estate. But for some reason, people have this fascination with like buying real estate while on a beach in Mexico and like ruining their own vacation because someone has the audacity to ask them to sign a piece of paper. Then don't go on vacation when you're trying to close a deal. Stay there. And I had one a few weeks ago where the lady, where unfortunately, because their timing and what they did, she had planned on closing and then was going away within like 3 days of closing right after because they were supposed to close on a Friday and she was going away on a Monday, right? Not a lot of wiggle room there. And that was because they had all the faith in the world that everything was going to work out on their sale and their buy, and it didn't on their sale. And we swooped in to fix it. But in doing that, they had to push their closing back, which ran right into her vacation. So someone out there is going to cry and say, well, that wasn't her fault. No, it wasn't. However, right, there was a comedy of errors that led up to that.
Yeah.
But it's amazing. You'd be amazed at how many people are like, you probably have stories. Hey, Sean, put an offer in. We're getting on a plane.
Yeah.
And then you're just like,
I'm,
okay.
yeah, it's happened. Or I'm somewhere else, and we decided while we were here that we want to put an offer in on that house that we saw while we were there. It's like, okay, it's it's cool to be able to do electronic signatures. I've got a client who is exactly that. She's her closing is, I don't know, I think sometime at the end of, I'm gonna say end of April, and a day or two before it closes, she's leaving. And so I'm like, well, you can sign before you leave. She's like, I don't want to cancel my trip. I'm like, that's okay. And she's like, oh, I think if I need to do anything, I'm available and I can sign things. I'm like, okay, it is what it is. Like, what do you do? Right?
And yeah, I mean, some of it's tough because shit happens. Again, can't cancel a trip, right? All this money spent. I get it. Situations come up. That house wasn't for sale. Now it is. There's all kinds of stuff.
Yeah, yeah.
But just be aware, right? And the other thing too is that your timeline, as cool as it is, doesn't dictate how this stuff works.
Right.
Like, no offense, you're not that important. Like, unfortunately, you are, but you're also not. The process doesn't move to fit you in most cases. There's always things and exceptions, right? But general rule of thumb, be there, be present, make sure you're available. Stuff happens.
Well, yeah, like think of how many people are involved, right? There's both parties, like there's the buyer and the seller. There's both parties lawyers. There's both parties mortgage brokers. There's both parties real estate agents. You're talking about 8 people. And you think that you're the one person who's gonna, oh hey, you gotta wait for me. Like, no, the date's the date. Figure it out.
Even on it, but even if you go to the lawyers, right? I know we know, people might say lawyers make so much money, rah, rah, rah. Fine. But these aren't litigation lawyers,
Yeah,
right? The real estate lawyers is a volume game. Like you need to do volume to
yeah,
make the money, which means you are not their only closing that day,
right.
right? There are multiple files on their desk and multiple fires that can happen. And they may not answer your email right away,
Yeah,
right? They got to do something else that day for the other guy,
that's right.
right? So yeah, like I hate to be that guy, but it's true. Like you're important, but you're not that important. So this Titanic doesn't move just because you ask it to. So let's said the iceberg.
Dead
But anyway,
No, that's a good point. That's a good place to take a quick break. We'll come back with story time for the second half. Colin and I both have a couple good stories, some financial information released through Edge. What was it? Edge? What are they called that you were saying before?
it's called the Edge Report.
Edge report. So
Yeah.
talking about financially how Canada compares to the States and what that might all mean for us. I've got a couple neat stories, some story time with Sean. So I'll share those with you guys, and we'll catch you on the flip side. This episode of the Real Collective Podcast is brought to you by Real Collective Marketing, the marketing agency that specializes in the unique needs and budgets of small to medium-sized businesses. We provide turnkey marketing solutions that get results. We become an extension of your team and act as your virtual marketing department, designing and implementing cost-effective strategies that will help grow your business. You can find out more today at www.realcollectivemarketing.ca. Now, here's your hosts, Sean and Kyle. Welcome back, you beautiful people, to the second half of the Real Collective Podcast. Hope you liked seeing that information about Real Collective Marketing and how that might affect you when you are doing some stuff for your small business. I realized that this thing has fallen over and I didn't pick it up. So that was when I had all those balls in my office for April Fools. Don't know if you saw that, but there were a bunch of 2,000 balls in my office right here. Like ball pit balls. That was the April Fool's joke. So if you didn't see it, go on socials. You can watch the whole one minute clip about how Rose, one of the agents on the team, pranked me with some balls. It was great.
She borrowed those? Where do they go after?
Return back to Amazon. So there's the follow-up story that she posted on her.
Oh man.
About the return and how karma came back to get her because she had to return them to one place, and then like, oh no, now you have to go to the other place to return the other. Like there's two sets of 1,000, but it was like $500 for 2,000 balls. So she's like, I'm not keeping these. So it's
random ball pit somewhere at Remax.
Yeah.
At the Real Collective offices.
That's right. It's sort of the cycle of life of balls. Anyway, hit that like
insert button. Own joke here.
That's it. Insert own what? Where?
Wow.
Hit that like button, subscribe, and share with someone who you think might like this inappropriate comment innuendo. We're going to talk a little bit about story time. We've got a neat story about a client who I helped buy a new build and save 25% off the posted price. And the question is, how the heck do you do that? So I posted it on social. A lot of people asking, like, how do you get money off a new build home? So there were a few things. First of all, I understood the situation that particular builder was in that particular neighborhood, where the values were coming down because, like we've said before, they had a lot of people who weren't closing. So they had a lot of investors from Toronto who thought, hey, if I buy a house in Richmond, Richmond is a suburb of Ottawa, it's going to be great. Well, it's not Richmond Hill. It's not overly inflated in terms of value. It's not one of the major suburbs of Ottawa. It's another 10 minutes past Canada. So it's not the same, but people thought it was. And so they were paying during COVID these huge prices with the rates at 2%. And then when it was time to close, the rates were 7%. Like, wow, we can't close. And so they didn't. So they walked away from the deal. Probably going to get sued. That's up to them. Now, my guys come in and say, hey, we're looking for either a new home or maybe want to fix our house up. So we looked at a few places, showed up at there, and I explained to them the whole scenario going behind the scenes. I'm like, this builder is feeling the pinch. So there's maybe an opportunity. So we walk into the building center, and there posted is, up to $222,000 off, including deals and discounts and all that sort of thing. So they know that they've got to sell. And most people walking in be like, shit, you're giving me $200,000 off? Cool, where do I sign? But with me, I always do a CMA for my buyer clients. And I said, hey, let me figure out what the fair market value actually is of this property. And so I did. I sat down with an appraisal form. It's Form 700. I looked at the 3 most recent comparable sales. I did increases and decreases for different benefits. One of the places that we looked at was a 4-bedroom home. This is a 3-bedroom home. So the 4-bedroom home is worth more. We also did a time value change. So, hey, these sold last summer. The current price is now. And we came to a number to say, hey, I know you're offering your $1.25 million house for $1,050, 1.050. So you're giving us $200,000 off. That's great. Here's our offer. It's $905,000. That's what the math says this is worth based on the other comparable homes that have sold. My clients were like, that is a low ball. I could not feel comfortable submitting an offer like that without getting laughed at by the builder. I'm like, look, it's just the math. And I told that to the builder. I said, hey, here's the math. The numbers don't lie. It is what it is. If you want it, we'll do it. If you don't want it, that's okay. We can go and buy something else. And, I was expecting them to come back and say something like 950, 975, something in that range. And I told my clients the same thing. I said, look, in reality, we're comparing against used houses. This isn't a used house. It's a brand new house. There's a benefit to that, right? What's that worth to you? Is it worth the 905 up to, is it worth $50,000, $75,000 to get the brand new house as opposed to buying a resale? Yeah, probably. Okay, good. So they give us a counter offer back after we offer 905. The counter offer comes in 937. Thank you. Bye-bye. And so I told my clients, I'm like, this is great. And so we took it, right? And my client said, like, there's no way we would have felt comfortable going through that process without you doing the work on the back end and justifying that price and that value for us. Because they were saying, hey, we'll give it to you for 1050 and it's $200,000 off. And now you're asking for another $150,000 off. Well, we got 113 off instead of 150. So pretty good. So they're ecstatic. Um, and my guys are like, well, what's the catch? Right? Like how is this happening? It's too good to be true. What are we missing? And the reality is the builder's feeling the pinch. They've got a lot of inventory homes and they're worried about these bigger houses that aren't selling, right? And so they're going to be here for 10 or 15 years. So they're buying less, which is great. And in 10 or 15 years, as that community continues to grow, their value is going to be okay. Right.
But they bought at the right price. Like at the end of the day, right, as we've said before, the market's the market. And unfortunately with new builds, that's been the section of the market that's got completely demolished in the last 2 years. Be with the rate increases, right? Sweet. And for sure, because that's unfortunately that's the thing. Just because you sold it 2 years ago for this price doesn't mean the market supports it. And people may not know this, but the bank doesn't support that either in a lot of cases, right? They don't. If they're asking for, which they will in a lot of cases, ask for an appraisal, then you're going to find out that your market does not support that price. And that's that. What sucks is the people that did move in and the builder just essentially wiped out $200,000 worth of their equity because they paid that. And now that everything is now sold lower than that, those are the people that are underwater, which is tough.
And you know what? They're underwater, but their payments are the same for the next 5 years because they bought it and the rate that they're paying is at that 2%. So yes, they're underwater, but they're only realizing that underwaterness until they sell. See, normally when you're buying and selling, if you're buying and selling resale, you're buying and selling in the same market. But when you're buying new build, it's like you're buying like real estate futures, right? You don't know what those futures are going to be, right? And so now you got to go and sell your house. Well, geez, I thought, when I bought this for $1 million, my house was worth 800. Now you're telling me this place that I bought that was $1 million, it's now worth 800. Now my house is worth 650. Well, hey, your gap is actually smaller, which is good, but the interest rates make it so that the payments are no longer attainable for you and your family. So that's what a lot of people got kind of screwed with, right? But if you're buying resale, you're buying and selling at the same time. You're not going to have these huge swings because these people all bought when the market was at its absolute peak, and then we had a 25% drop, and we're seeing 25% drop, a 25% reduction on our purchase price of this home, right? Which is like people are like, oh my God, why are they doing that? Because the builders still have their costs, right? And they sort of maintained that their new prices have not been realized with the new reality of the market. So it's something to consider when you're buying a new build, is that you're sort of, oh, what's going to happen down the road? Don't know, right? I think based on everything we're hearing for the next year and a half, we're going to be okay. So if you can go and take advantage of a builder who is like desperate to sell, I think there's good deals out there. There's some really good inventory homes out there. But you have to, you're taking that risk, right? I think it's a lot less risky today than it was 2 years ago. But if you're a buyer and you're looking at what happened over the last 2 years, you're like, oh shit, this is scary. I don't know if I want to do this, right?
And not to push business out the door, but there are a couple banks who will literally take your approval today and
Yep.
park it on a shelf and never look at it again. So if
Yep.
that value drops, there's no problem there.
That's right.
However, if your situation changes,
Yes.
right? If your situation changes and you need to ask for something different, that safe approval is toast.
Yeah, exactly.
So you want to be careful. You want to be careful about how much you lean on that going forward, because you're, as much as I don't even understand how they do it. I don't agree with it, but that's not my problem. I don't even work with them, but that has also saved a lot of people in the last 2 years.
Yeah.
That relationship with that specific bank.
The blue or green?
Blue.
Yeah, blue and yellow. Yep, got it. It's okay. You know what? There's different people who offer different services, and I'm not the right person to serve everybody. And if that's what they offer you, then that's great. I know the Green Bank does it as well, and I think you're connected with them, and you are able to work with them as well. Yeah. No.
Not for that. Like I do. Yes, I work with them, but not for that product.
Right. So that's, you walk into the building center, and the building center, they're going to say, hey, we've got people from the banks. Here's the two banks that we work with, and they offer it only for new builds. I had a client who took a real advantage of that on a new build, who got locked in with something and then sold as the market was coming down, but he still sold for the top dollar, still had his rate at 2%, bought his new build at a price that was way lower. So like everything worked out in his favor. Like it was like perfect. You couldn't have planned it better, right? Especially how long it was taking and running through that. It was at the middle 2022 and we started seeing prices come down. Like, so yeah, it was, and then it was an issue for the buyers of his house because we sold it for 900 and the appraisal came back and it was 8, and we're like, figure it out. Not my problem. Oh, can you reduce the price? No, figure it out. You bought the house. So yeah, it was interesting. Talk to us a little bit about the Edge report.
Well, yeah, Speed, the two things that came out of this report, I'll probably post some stuff on socials. So whenever you're seeing this, go back to my socials. You'll probably see some stuff. Two big things that came up were the fact that, interestingly enough, Canadians have enjoyed way more equity growth than our U.S. counterparts, which is interesting. Over the last, I can't remember, 10 or 20 years is the scale. But I think the other thing that's come out a lot too is this is, again, there's economically speaking, there's always lagging indicators. So this report's going to, stop in like January, and we're already April, but that kind of makes sense. And it was saying that our inflation rate has dropped. And if we removed mortgage interest costs, which is still a debate as to why it's in there anyway, we would be at the 2% inflation rate that the bank's looking for. So I don't know, people that get paid more than me and apparently smarter than me playing around with numbers, but we've hit the target if they readjust what they want to look at and then start dropping the interest rate. So we'll see how that goes. But that's an interesting little tidbit there.
From a layman here, they say we're going to move one of the numbers that's in the numbers that we use as the target to calculate, and we'll only move it once the target hits the number. Like,
I'll be honest, I don't understand. There's massive debate on it about why it's in there and should it be or shouldn't it be. Considering they literally control that.
Yeah.
Right. So they literally control that one instance. Everything else is an effect.
Yeah,
is an effect of what goes on. They literally have the button that can move that.
Yeah. And they're using whether that moves as one of the pieces to determine whether or not they should move it. Which is,
Exactly.
it doesn't make any sense. Hey, I'm gonna move interest rates if the total inflation comes down. Well, part of the total inflation is interest rates. Okay, well, if you take interest rates out, we're at the target that we need to be to lower interest rates, but you're still not
Which
lowering interest
it's
rates?
like it's yeah, and it's almost like, and that's 0.8%. Like
Right,
in this statistic, it's 0.8%, which means we'd have to have inflation down to 1.2% to be able to
right,
keep rates where they are and have the overall target be achieved.
right. That's silly.
I
You know,
don't know when I've ever heard of inflation being less than 2%.
no, it's normally three, I thought. You know what it reminds me of? That there's this riddle is you've got a frog on a log, and it starts in the middle of the log, so like halfway through, and it always jumps halfway and from where it is to the end of the log. And the question is, when is it going to fall off the log? And the answer is it's never going to fall off the log because it's only ever jumping halfway. Like it seems it seems silly. Like it seems like there's the math won't ever really work. I don't know. It seems anyways.
Yeah, no, and I think it's, yeah, and that's a bigger conversation, and I'm not smart enough to even debate it. Um,
That's all
and
right.
just, but I also don't understand. I don't get it. I don't get how they put that in there. And I'd have to look into double check this comment, but I'm pretty sure we're one of the only nations that calculate our inflation rate that way, which is, again, I mean, yeah, it's odd.
Hey,
It's odd.
there's
But anyways,
there's a reason. There's got to be a reason for it that's above our pay grade. So hey, it's okay. Whatever. Hey, you know what? Let's just buy and sell houses, put mortgages together, help people out. Hit that like button, subscribe to the channel, share this with someone who you think might like this conversation. Schedule an appointment with Dumb Kyle or I in the Calendly links below, where we can't tell you anything about what these guys are doing and why they're doing it. But if you want to buy or sell houses, we're your guys. Or mortgage, refinance your mortgage, all that good stuff. Download the buyer or seller guides below. And until next time, keep it real.
collective.